making 1% per day on your investment. Hey guys, this is Mehdi at Choosing Options, and today is Tuesday, July the 10th. I wanted to show you how you can make 1% or even better per day on your investments using options. First, I'm going to show you how I've done it on this YouTube channel, the history of videos that I put out. I've been doing this for a couple of months now. Um, there are like two trades that I've done and closed within 30 days. First one was if you look up here, I'm gonna show you the location of those trades. First one was symbol M as in Mary YL. It was put on May the 23rd, and I closed it on June 18th. It's a 26-day trade, and I made 65% on the trade. The second one was an EWW Echo Whiskey Whiskey on May the 25th, and I closed the trade on July the 2nd. 38-day trade, 63%. The reason I say 1% is you don't win them all, you lose some. But if you followed up the procedures that I show in this video and the previous videos, you'll be, successful at this. Okay, now let me show you how I do this thing. First thing I do, I run a scan of the whole market, ETFs, stocks, everything that's liquid. That is, they have a volume of a million and above, or pretty tight ask and bid prices. Let's see here. Okay, here's a scan that I ran last Friday. I actually put out a video on Friday, the 6th, July the 6th. This is a scan from that video. Actually, you can go and look at that video. May actually post it up here. Okay. By the way, if you need, if you like to, you can subscribe or shoot me an email at info@choosingoptions.com, and I can email you these daily scans. It's up to you. If you want to, just shoot me an email and request, let a tiny note saying that you want a copy of these scans on a daily basis, or however often I run it, and I email it to you. So here's a scan. I sort everything by the implied volatility percentile, that is. Well, the first column is the actual symbol. Second column is the trading price, price change, the volume. This column is very important. It's the daily standard deviation of the stock. If it's above 1 or -1, below -1, those are the stocks that I keep a note on, and I probably trade them the next day or two. I follow them, like EWZ is one of them right now. And the higher the implied volatility, the better. The borderline would be, I have SPX or spiders, which on Friday was trading around 63% of its own percentile. Anything above this, I prefer 10% above this. Those are the tradable stocks. This column is implied volatility minus historical volatility. It has the scan that I ran, comes up with all the positive. If it's a negative, it's a sign of weakness. It's a sign of the stock or ETF is being volatile. So the positive number, when implied volatility is higher than consistently higher than the historical volatility, it's a sign of stability. So that's what you want. That's very important. The next column is the 52 weeks price range of its own price range. So, and if it is above 95 or below 5, I won't trade it. So anywhere from 5 to 95 is tradable. That's another criteria that I'll look at. These two columns show historical volatility down or up, which means here's the implied volatility column. This is a monthly historical volatility column. This one is 2 weeks biweekly column, and this is a 1 week column. So if the monthly is higher than 2 weeks and 2 weeks is higher than 1 week, you'll see a 1 here. If it's the other way around, you see a 1 here. See, like this guy. See 23, it's crimping up, you see a 1 here. This is the column that interests me. Whenever I see a 1, I look into it, like EWZ. I didn't trade that because of obviously the standard deviation is too high on Friday. This is a Friday prices, by the way. The next one was Disney. I didn't trade that one because I already had Disney in portfolio, but this would have been a good trade. If you just want to get into the market, this would be a good one to trade. The next one is John Deere. I think I already had John Deere in there as well. Or maybe, yeah, I did. The next one is Boeing. I didn't trade that one because the earnings, by the way, let me pause right here. I sell options and rarely buy them. When I buy calls and puts or straddles is when I want to reduce my deltas and gammas. I have a video on this. If you look at my channel for like insurance purposes, I buy. You will be more successful selling options in a long run. I see there are very few people who make money buying options. If you are one of those guys, shoot me an email. Let me know how you do it because I really like to know. Yes. Where was I? Yeah, the video that I put on Friday, I'm going to put it up here. You can actually follow that one too. So basically, if this column, you see a 1 in here, these are good for selling a call, selling a put, or do them both at the same time, which is called strangle. Out of the money call, out of the money put, I use the probabilities, 90% in the money, 10%. Basically, if you don't know about the probabilities and your brokerage doesn't give it to you, just look at the deltas. Delta of 10 on each side. That would be closest. Yeah, I do play, like on that day, on Friday, what did I do? Let me see, hold on. Yes, on Friday, I did trade Disney and MYL. That's why they're red. If you look at that video, it'll explain all of that. So I average around 27 days overall. Within that period, if the trade goes well, you'd be looking at some roughly about 65% profit. I take profit around 20%. If I sell anything at $1, for instance, I buy it back at around 20 cents. If it goes against me at that criteria, if delta 10 up each side, I usually close the order. I risk two to get one. So at the dollar, you're looking at $300. If I sold it at $1 and it goes to 3, that's the price that I'm going to get out. I don't want to risk anymore. And trading options, if you want to be successful, never trade on how much you can make. Trade on how much you can afford to lose. So set a price. I would say don't risk more than 1% of your money per day. So let's say if you have $10,000, just trade $100 per day. To me, it depends on your risk tolerance. I wouldn't want to risk more than 1%. Some people do 2%, but I think let's just put it this way. At 1% per day, there are 20 trading days per month. And let's say you average about 30 days. So it would take 30 days for you to get your money back. So you're looking at about 30 trades. That's 30%. If market goes against you, that's 30% of your money that you're going to lose. So if you lose 30%, you still have about 70% to work with. But if you do 2%, you'll be losing about 60% of your money. And then you have only 40% to get your money back. The profit margins are high, but you have to be able to control your greed and also fear. Don't be scared to put on trades. Open a paper account, do this on your paper account, and you get the hang of it. It's going to take many, many days, weeks, months, but once you get a hang of it, you'll know. And if you want these scans, shoot me an email, and I'll try to send you these scans on a daily basis, at least once or twice a week, at the maybe even every day. Yes, subscribe, send me an email, tell me how I gotta apologize because I'm not, as you can tell, I'm not that good in putting out videos, but this is something that you can do as a hobby and just play around with it. You don't have to use your own money, just paper account, do this, and you'll see how easy it is. After a while, you say, oh my God, this is not that hard at all. And you don't have to know about the math. I use a lot of probabilities, but the computers do all of that for me. So yeah, like these videos, subscribe, let me know what I need to fix. I know I need to do a lot of work on this. Yeah, I'm just not 100% prepared when I put out these videos. If you have pointers, let me know, so I can fix stuff at my end. So happy trading. Let me know.